No, I don't think it stops in the near term. I think it's just going to continue to bleed out because it's got a 1.5% fee on it versus 0.25% on any other, right? So the margin there on fee is just so great that I think it's almost impossible for you to look at that and think that it's a good value, even though they've been in the space. Running an ETF, I mean, ask Dave, running an ETF is not that difficult. You do have to have some trading acumen and be able to make the markets in order to be efficient and match the underlying performance of the asset. But that's not that difficult, especially with all the programs and machines we have now. It's not something that sets them apart in my mind.
James Lavish, a distinguished macro analyst and former hedge fund manager, offers insightful observations on the recent downturn in Bitcoin's value and the ongoing situation with Grayscale Bitcoin Trust, GBTC. On Monday, the cryptocurrency and others experienced a decline, with outflows from the largest spot Bitcoin exchange-traded fund exerting downward pressure on prices. The current market dynamics appear to be influenced significantly by selling pressure from the GBTC. With the SEC approving 11 spot Bitcoin ETF products in the US, some GBTC investors have shifted to these new ETFs, contributing to substantial selling pressure. Reports reveal that GBTC has divested over $2 billion worth of Bitcoin on Coinbase. Simultaneously, the now defunct cryptocurrency exchange FTX liquidated nearly $1 billion of its GBTC holdings as part of its bankruptcy proceedings. Lavish reminds us to expect further challenges and potential downturns in the ongoing developments related to GBTC. However, he also points out the existence of other critical factors that play a significant role in shaping the cryptocurrency landscape. One noteworthy fundamental is the Bitcoin halving. This involves a reduction in the reward granted to miners. Historically, halving events have notably impacted Bitcoin's supply and demand dynamics, often leading to substantial price movements. Given that Bitcoin experiences halving every 210,000 blocks, projections indicate that the next halving event will likely coincide with the attainment of a block height of 840,000, aligning with the anticipated timeframe in April 2024. Now, let's dive into snippets from Lavish's recent interview with Scott Melker as he expresses his perspective on the current issue regarding GBTC and its fee structure. As you enjoy the discussion, we encourage you to take a moment to show support. Give the video a thumbs up, share it with your circle, and don't forget to hit subscribe for more insightful content. Your support means a lot, and we hope you find the video enjoyable.
So that argument from them is they're going to continue to lose that argument every single day that they keep their rates at 1.5%. So no, I don't think it's just gonna stop overnight. It will ease at some point, and you'll just run into these the core holders that don't care about the fees, and they think 1.5%, who cares? This is an asset that's going to go up hundreds of percents, so who cares? But we're not there yet, in my opinion. Also, we just have not seen the inflows from registered investment advisors and institutions that we would expect, and that's actually, if you step back and look at it, that's actually bullish. Not that surprising. It's bullish, and it's not that surprising because it takes a while, not just for all of these firms to get their pipes in place. They have to. When we went, just for information, when we went to buy the spot ETF for a volatility position that we were putting on for my hedge fund, we had to instruct our prime broker to go and add the QSIPs to their systems in order to settle the trade. That was on the morning of these things opening, and that's not atypical. So you still have people out there who don't have you have investment advisors out there who don't have the capability yet, and then you still have the Vanguards and the UBSs and the Merrills who are pushing against it as hard as they can. And so the on-ramps are not there yet. It's going to be slow. It's going to be more like a trickle until it turns into a flow. And right now it's a trickle, and it will become a flow. The question is, and I think that Mike brings up a great point, is do we hit the economic skids before it turns into a flow? because we're still in a slow-moving, event-driven situation with Bitcoin and the ETFs. It's still playing out kind of in slow motion every single day with GBTC and more managers getting access to it. So, but do we have some sort of event, or do we have a downturn in risk assets that Bitcoin? That you can say whatever you want. This thing has led risk assets for a long time here, for years, and so it is playing a dangerous game at this point, and it could easily correct. And this is Bitcoin we're talking about. Yeah, it could correct down to the 30s, no doubt about it. But on the flip side, you could see that the supply side just dry up completely and it run 10, 20, 30% in a blink. And it's the reality of the way the asset trades still.
Lavish discusses the possibility of a significant correction in Bitcoin's price, raising the question of whether economic conditions or a downturn in risk assets could impact Bitcoin's trajectory. He acknowledges the potential for Bitcoin to correct to $30,000, but also notes the unpredictability of the cryptocurrency market, where it could experience rapid price movements in either direction. In light of Lavish's insights into the potential for significant changes in Bitcoin's value, it is advisable to diversify investments across different assets to manage risks effectively. Maintaining awareness of broader economic trends is essential for anticipating potential impacts on Bitcoin. Acknowledging the inherent unpredictability of the cryptocurrency market, it is prudent to set realistic expectations and implement robust risk management strategies. Seeking guidance from financial professionals can provide tailored advice aligned with individual financial goals and risk tolerance. Lavish used to work as a hedge fund manager, but he decided to leave that job because he saw serious problems in the traditional financial system. In the interview, Lavish expresses a pessimistic view of the US economy, hinting at the potential onset of a recession, if not already underway. Here are some clips as he elaborates on this matter.
Here's something interesting. So just look at I wrote about the Michigan consumer sentiment, Michigan numbers, right? The consumer numbers. And so what's really interesting is that we hit levels over the past year and a half that would be consistent with a recession, right? So if you see in the recession, we hit levels that's really consistent with recessions. But we didn't have one. Why? Why did we not have one? Because of massive deficit spending that covered it up. It just papered right over it. So people are feeling terrible. Prices are high. They can't afford things. Yet GDP is running. Wow, how is that possible? Well, because
pushing on a string.
Yeah, you're pushing on a string. So yeah, consumer sentiment is coming back. But I will and Dave and Mike will agree with me every single time. Look at where consumer sentiment is right before a recession. It's always right at the highest level of that period, and then it drops off a cliff. I mean, so when everybody's feeling great, that's the time to get a little bit itchy and worried. And so we're not quite there, but there's something that just doesn't add up here. And I'm going to contend that it is the deficit spending, severe deficit spending in a non-recessionary period that kind of papered over the recession and made it look like everything's rosy. And so when you have politicians in the White House up there, claiming and professional economists, PhD economists up there claiming that people are lying, their life is good, it doesn't make sense, everything's great, the economy's running along, Bidenomics, it's not true. Which goes back to what Dave was saying, is that we're just injecting, we're this is inflationary, the deficit spending. And so but where does it stand? And you're seeing the interest expense, but we added $2.6 trillion of federal debt last year. And now we're running at $2 trillion of annual deficit, right? So if we're spending $6.4 trillion, our revenues are about 4.4. The GDP is not keeping up, and so that's our tax base. So the problem is, if Mike is right, and my suspicion is right, and we run into a recessionary period here pretty quickly in this year, then typically your entitlement spending rises by about 8 to 12%. And then because of unemployment, et cetera, and then your revenue decreases by a like amount. So just using 10% on kind of an average for both of those, you're talking about your spending increasing to over 7 trillion, and then your revenues dropping to under 4 trillion, giving you a deficit of over 3 trillion. And that's so we're running this is the most important part about what you're talking about, Scott, is that we're running $2 trillion deficits, and we're not even in a recession. Like, this is just, it's absolute madness. It's lunacy. So if and when we do hit a recession, that's going to go up by 50%. What do you think they're going to do? You think they're just going to allow the GDP to drop off a cliff? Of course they're not.
During the pandemic, the US public debt started to surge. Recently, it has passed $34 trillion, a record even when accounting for inflation. Projections indicate that public borrowing is anticipated to reach unprecedented levels in numerous major global economies this year. Notably, over the last century, the US federal debt has escalated from an inflation-adjusted $403 billion in 1923 to $33.17 trillion in 2023. Central bankers expect the gross domestic product to grow moderately by 1.4% in 2024, provided the economy handles the Federal Reserve's tightening measures without significant harm. This anticipated growth would be the second lowest since 2010, with only 2020 having weaker economic expansion. The economy's pace slowed, achieving a 3.3% growth from the fourth quarter of 2022 to the fourth quarter of 2023, down from the 4.9% growth in the third quarter. Despite this slowdown, the 3.3% growth surpassed economist predictions of 2%. This resilience indicates the economy's strength exceeded initial expectations. However, skepticism lingers among many economists about the US's ability to steer clear of a recession. As we conclude our discussion on Lavish's expert insights, we invite you to share your thoughts in the comments below. Do you think Bitcoin's price will surge after the halving, or do you think otherwise? Are you optimistic about the cryptocurrency market and the US economy, or do you share Lavish's concerns? Your insights contribute to the collective understanding of these intricate dynamics. Don't forget to like, share, and subscribe for more in-depth discussions on finance and cryptocurrency. What topics would you like us to cover in future videos? Let us know, and until next time, happy investing.